Hi there traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar. Unfortunately, I was out due to a cold for 1 week, so that was a pity, but I'm going to be back this week. Next weekend, I'll have to skip the video as well due to our seminar in the Netherlands. So if you're joining us Saturday, February the 16th, looking forward to see you there. Otherwise, of course, we'll be back with these videos except next weekend. All right, so let's start. Luckily, I'm feeling better at the moment, so let's go with the euro dollar daily chart. And I think that the euro dollar, I was of course bullish, as you know, but with this particular breakout again, the second break actually below the 21 EMA, with the second break, or actually the fifth break, more or less failing pretty strongly. Well, that does certainly change the perspectives in my view. And I think that the bearish breakout is now pretty likely, and definitely more likely than it was 1 or 2 or a couple of weeks ago. So yes, long-term vision is a little bit changing. We're still looking for the official break below this trend line, below these bottoms of the sideways zone. But I think that there's a higher chance we might get it, and if we get it, that the breakout will be successful, just based on the patterns around the 21 EMA for the moment. In that case, price probably completed a wave. Let me open my drawing tool, ABC here, and this could be already a downtrend with wave 1, 2, and this is the start of a wave 3. So that downtrend, if it is what I think it is, could be pretty strong. But once again, I don't think it makes sense to trade right here, right in front of support at 113, 112.70. I would rather wait for the break of that zone with the strong daily candle close near the low, daily candle close below the support zone of 112.70, and look for a flag on the lower time frame and a continuation. And price could go pretty much, there's a pretty good space basically. Let's put the fib on here. I was looking for a bigger correction here. So far, this correction is pretty mild. So, it's basically a 23.6 fib bounce, which, well, that's pretty mild and that's pretty shallow. But in any case, if it goes to the minus 272 target, it's at 108.60. 110, of course, is a round psychological level as well. So for the moment, those could be levels to think about if we get the break. Pretty bearish candle as well, by the way, as you can see here. So on the weekly chart, by the way, this is. Let's zoom in back to the 4-hour chart. There we go. And well, this could be a 5-wave as well. So this is a ABC correction. We can see now is one of the scenarios that is likely, I think, at this point. This could also be ABC or a 1, 2, 3. Now, considering the fact that the price is pulling away from the 21 EMA, it's probably looking more like a wave 3. So that is the most likely scenario, I would say, a 1, 2, 3. Now, if for whatever reason it miraculously bounces to the upside, I'm willing to consider that this could still be a wave 1, 2. This does not really look like a wave 1 to me. Because of this kind of 3-wave pattern here. But if you zoom into hourly chart like this, 1 second, and let's go back a little bit, you could see maybe a wave 1, 2 here, 3, 4, 5. Not that likely, but okay. In case price does make a big rally here that goes beyond the long-term moving average, that goes beyond 114. All right, so that would have to go like this, and then this. In that case, with this break like here, then something else might be going on, maybe some triangle, we could see another repush, another move up again towards the 115. But for me to be trading anything bullish, as you can see, I would need price to be above 114. All right. So not that interesting pair at this moment, I think, in my view, the euro dollar, but that's my view at least. So pound dollar, as we know, has been moving up pretty fast, but as we also know, Brexit news could be around the corner, especially now that the hard exit is coming pretty close, March 29, I believe, and it's maybe 47 or 48 or 46 days, something like that. Not much time left to negotiate and see if there's a deal. So that, of course, can impact the pound, that could impact the pound dollar. So be aware of that. Now, from a wave and technical point of view, I think it's still pretty good momentum. I think that this is looking more like a retracement, and we had a bullish candlestick pattern at the 21 EMA. So this could still be a wave A, this could be a wave B, and up we go for wave C. That is what I normally would say if there were no Brexit news. Still seems most likely at this moment. And I think that price could go up to, for instance, the -272 target. There we go, at around 134.30. And that could be a bouncing spot for the continuation of the downtrend. So that's what I'm waiting for, is price to move up to that target and then fall again like this. Now, if price, for whatever reason, starts to hesitate here, maybe on a 4-hour chart, we can see that better. If price makes some kind of flag like that, well, then we got to be careful, because then a deeper retracement is possible, or maybe even a downtrend. So be careful of the pattern here. If it is a bear flag, look for the breakout continuation. If we get a push, pullback, and a continuation, and we get a good second break above the 21 EMA, then that would change perspectives, and we might be looking at a bullish breakout. Once again, I will be looking for the second break above the 21 EMA, because price has been below the 21 EMA for a substantial period of time. That's why I wouldn't trust the first breakout. But if it makes a first hook back and then the second breakout, that would change things and would look more interesting for me regarding the pound continuation. In that case, this looks like a correction that has been finished. It looks like a break, pullback, and continue. Okay, so that's what I'll be waiting for. Otherwise, if the ABC that I expect is not going to take place like this, what I would need to see here too, just like with the euro dollar, is a pretty impulsive candle that breaks through these fibs like that. Maybe breaks below 127.25 even. Otherwise, these fibs could be still bouncing spots, right? But if there's a strong candle breaking through it like that, well, then in that case, there's probably good momentum, and it could follow through to these, at least to these deeper fibs, all right? And if not, maybe even breaking this bottom. So it depends on what kind of impulse we see here to the downside. I would change perspectives. Otherwise, to me, it is still looking more like a bouncing spot for a move up to complete the ABC zigzag to the -272 target, all right? But not a big fan of the pound dollar either at this point, generally speaking, because of the Brexit news. All right, traders. Well, I hope to see you in the seminars that we have coming up. 16th of February is the first one in the Netherlands. Then I'll be speaking in Prague on March 9, also a Saturday. And then we'll have seminars in Zagreb and Belgrade, Zagreb, Croatia, and Belgrade, Serbia, and Prague, Czech Republic, of course. So those are all lined up in March. So take a look at our website if you want to see us live. Looking forward to seeing you there. And above all, of course, thanks for joining, and wish you all good trading. Cheers.